How's it everyone? Welcome back to the channel. In this video we are talking about how you can pay less tax by operating as a small business corporation, or SBC for short. So an SBC in my mind is probably one of the best ways that you can structure a company, especially when it's small and there's not other companies involved, or you want to create a group company structure. And the reason why it's so effective is it because it has a similar marginal tax rate as individuals, but much less. So an SBC, the tax rates go from 0 to 27% instead of the normal 27% that companies have. So a normal company is taxed at 27% regardless of how much profit there is, but an SBC can qualify to either be at 0 or at the 27%, and it's a sliding scale. Another thing is it's probably one of the best ways to limit the amount of tax that you have to pay in the first 3 to 5 years of a company until it becomes quite a big company and there's a lot of things to take into account, or you want to have a lot more partners. So this is an ideal structure for people who are sole shareholders, or they have a partner, they want to get a partner in the business, but things are staying relatively small. So now we're just going to talk about what the requirements are in order to qualify to be an SBC. The first one is all the shareholders of an SBC must be individuals. They cannot be companies. So you can't create a holding company with a trading company structure, because now the holding company has shares in the company. So you can't do that. It has to be individuals. The next rule is those individual shareholders can't have shareholding in other private companies. You can, however, invest in things like property or shares on the JSE, or you can invest in crypto, but you cannot. So if I am a shareholder of my company, I can't be a shareholder in Mo, my photographer's company. It has to be one private company that you're a shareholder of. The moment you have shareholding in another private company, SARS sees you as a bigger business. The next rule is the company, their turnover or revenue must be less than 20 million. And in my mind, that is that's quite a big number, especially if you're not a big contract type of company. So if what you do is on a low end of a sales spectrum, so your products are 5,000 Rand or 10,000 Rand, it's not million Rand contracts, then again, SBC might be the right way for you to go. And then finally, if you're a professional service or personal service rather, then you can't qualify to be an SBC. So accountants, auditors, lawyers, veterinarians, doctors, consultants, IT specialists can't be SBCs or can't qualify unless, and this is very important, unless you have 3 or more employees, full-time employees working for you. But anybody else can. So the best example I can give is creatives, people who are photographers, your videographers, writers who maybe freelance write for magazines, social media producers or influencers. They can all qualify for an SBC without needing to meet the 3 employee requirement. So again, just to wrap up, must be individual shareholders, turnover or revenue must be below 20 million a year, can't be a personal service unless you have 3 or more employees, and the shareholding, you can't have, one of the shareholders can't be investing in another private company. But this is a great way to pay very little tax, especially if you're starting out in business. And that is part 2 of the No to Low Tax series. If you enjoyed this video, you can click here for another one or consider subscribing. Cheers.